Today we're going to look at a strategy to trade the monthly non-farm payrolls report. Stay around. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. The non-farm payroll, or NFP report, is probably the single biggest predictable price mover of the month for the Forex market. We're going to look at the NFP and discuss what it is, why it moves the market, and how to take advantage of it. In Forex trading, NFP day is viewed as the most feared day of trading, but it doesn't have to be that way. The day is typically characterized by increased volatility. A lot of increased volatility. But of course, we usually fear things that we don't understand, so we want to help you get a grasp on the NFP so you'll be able to trade it more confidently. We'll talk about how to trade the non-farm payroll report without getting whipsawed by the crazy volatility. Our NFP trading strategy combines unique trading patterns that work with the volatility. The non-farm payroll, or NFP report, is a key piece of economic data that measures the number of new jobs added to the U.S. market during the previous month. The NFP number includes only non-agricultural business within the USA. The NFP data excludes farm employees, private household employees, government employees, and employees of nonprofit organizations. In other words, the NFP indicator is a good measurement of the performance of the U.S. economy. The non-farm payroll figures are released by the U.S. Department of Labor, and the time is typically 8:30 a.m. Eastern Time or 1:30 p.m. GMT on the first Friday of the month. The NFP is the most important economic data release in the world because it's watched not only by pro Forex traders, but also stock traders, futures traders, and top options traders. All asset classes, including currencies and stocks, are going to be impacted by the NFP release. So why should we trade the NFP in the Forex market? Well, when the US dollar moves, all other global assets will also move in response. The payroll figures can change significantly month over month due to its correlation with economic policy decisions made by the US Federal Reserve. The NFP figures are closely watched by traders from around the world. Any changes in the market participants' opinion have the potential to trigger volatility in the markets. In trading, volatility spells more trading opportunities and bigger profit potential. As you know, using an NFP trading system that exploits volatility can be extremely profitable, and the US dollar is the most predictably volatile at this time. However, on the day of the NFP, you need to be cautious, especially if you're a short-term trader, as with higher volatility strategies also come bigger risks. Generally speaking, a high reading of the NFP data is seen as positive for the U.S. economy. So stocks and the U.S. dollar should benefit from it. At the same time, a low reading is seen as negative for the U.S. economy. However, more often than not, things don't go as per the textbook rules. We also need to include other factors like the market expectation and other unknown variables during the actual data release. So first you need to understand how to properly read the NFP report. Here's an example of one. The typical NFP report will include more than just the non-farm payrolls. The non-farm payrolls report also measures the month-to-month change of the unemployment rate, private payrolls, participation rate, average hourly earnings, and the average work week. Usually leading up to the actual NFP release, there is going to be a consensus view forecast of what the NFP numbers should be. This consensus will be put forth by economists. Obviously, if the actual NFP numbers end up being above the expectation, it signals a stronger economy and subsequently the dollar crosses should benefit. On the other hand, if the actual NFP figure is below the consensus, it signals a weaker economy and subsequently the dollar should be hurt. So prior to the release of the actual data, prices will typically adjust to the forecast data. So we are not necessarily looking for the actual NFP numbers, but the change of the NFP numbers with respect to the prior forecast consensus view. It's the surprise change in the numbers from the consensus that typically drives the market in one direction or the other. The market is going to adjust in price according to the actual NFP numbers. So as you can imagine, the bigger the NFP misses, the bigger the market will spike. Whatever the NFP numbers are going to be, above, below, or in line with the market expectation, the market is going to adjust in price according to that data. The best moving currency pairs to trade during the non-farm payrolls are the US dollar crosses, namely the major currency pairs like the Euro USD, the Pound USD, the Australian Dollar USD, and the USD Japanese Yen. The minor and exotic currency pairs can also print an increase in volatility during the NFP release. However, the other crosses tend to have unpredictable price reactions. For example, see how the Great British Pound US Dollar on the left reacted to the recent NFP release compared to the Great British Pound Australian Dollar on the right. The Pound US pair had a substantial price movement as compared to the Pound Australian pair, which barely moved. This happens because the Pound Australian is a synthetic pair formed by the Pound US Dollar and the Australian Dollar US Dollar, which blocks the Pound Australian Dollar from moving much, as both the Pound US and the Australian US will weaken or strengthen at the same time depending on the NFP data. In summary, if you focus on the major currency pairs, you'll be just fine. You need to be careful during the NFP event because a lot of the time your position might be whipsawed and get stopped out. That's why you need to prepare to face different market scenarios. There is no one-size-fits-all solution in trading the NFP. You won't be able to use the same NFP trading strategy because the price action will behave differently with each data release. In this video, we'll cover 3 different NFP trading strategies and an advanced approach. The first NFP strategy is trading ahead of the NFP report. For this strategy, we use a short-term time frame because the main goal is to scalp the market for a quick profit. NFP is a great source of volatility and usually causes big price swings. If you don't like to get into the NFP trading economics, then the best way to get started trading the non-farms payroll is to focus only on the price action. Here are the steps to day trading NFP using only the charts. 15 minutes before the NFP release, mark the high and the low of the last 4-hour trading range on your chart. Place a limit buy order above the high of the range and a limit sell order below the low of the range. Place a protective stop loss order on the opposite side of the range for both of the limit orders you've placed. Wait for the NFP to trigger one of your orders. Remember to cancel the other pending order once you have an open position. As for the take profit, use a price target that is equal to the trading range identified in step 1. Here's a 15-minute Pound US Dollar chart example. The blue represents the range that we've measured. As you can see, the sell order was triggered and a few hours later, the 1-to-1 take profit was hit. The second NFP trading strategy you can use is to trade the fade. In Forex trading, NFP fade is to open a trade in the opposite direction of the initial release reaction. The idea behind this NFP strategy is to wait for the initial spike and then trade what happens after it. This NFP trading strategy works because most often the initial NFP spike is just a knee-jerk reaction to the data. And this is how you can interpret the NFP knee-jerk reaction. Based on the actual release, traders will overreact, jump in and out of a trade, which in turn will create this heightened activity. However, after the dust settles and the market participants digest the new NFP figures, traders will reassess their positions and will either take profit or cut losses. This in turn will cause a temporary retracement that creates a short-term trading opportunity for us. Take a look at this recent NFP release. The USD yen shoots up on the initial release. At one point, the market reaches a plateau, the overbought reading, at least in the short term. The buyers take profit and the sellers take their losses and the pair starts to drop. That's what we call the fade, and that's what we plan to profit from. Now, we don't want to normalize fading every NFP spike because that is a recipe for disaster. As a general rule, we only look to fade spikes into key technical levels like a prior swing high or low. The trading secret we use is to look for key levels on a higher time frame but manage the trade on intraday time frames. And lastly, we're going to look at the NFP trading strategy for swing trading options. NFP trading can also be extremely lucrative for long-term trends in the market. This approach can be fruitful but you need to be patient. A lot of the time, the unemployment numbers can have an impact on the long-term trends. The NFP is a strong driver in the Forex market and has a much more profound impact on the price action than just the initial reaction. Often the price will follow through in the direction established by the NFP. As a general rule, Friday's NFP can give us strong clues whether the current month is going to be bullish or bearish. If in the next trading day we break above Friday's high, there is a pretty good chance the pair will be bullish for the entire month. Conversely, if the next trading day we break below Friday's low, there's a pretty good chance the pair will be bearish for the entire month. As you can tell, once Friday's NFP high or low was broken in most cases, the Great British Pound US dollar pair continued to trade in the direction of the breakout. A good strategy will be to simply place a buy limit order above Friday's high and a sell limit order below Friday's low. Or you can easily use this information along with your own strategy to keep you on the right side of the market. In summary, the non-farm payroll report can present short-term trading opportunities as well as long-term potential profits. For day traders, NFP Trading Forex can be the source for more trading volatility and subsequently the potential to realize quick gains. For swing traders, the NFP trading strategy can be used to determine the market bias for the month ahead. Here's a short recap of the NFP trading strategies we discussed. Trading ahead of the NFP report using the price range established prior to the release, trading the knee-jerk reaction, and swing trading the NFP. Practice these NFP trading techniques with a demo account before you put at risk any of your hard-earned money. And that's it for this week's video. Come back for my videos on Monday, Wednesday, and Friday at 3 p.m. New York time. Don't forget to subscribe and hit the bell for notifications. Have a great weekend, and I'll see you with a couple of trade picks on Monday.